I'm sorry I have to start the show with a very sad announcement. The death of the S&P 500. Rotation, rotation, rotation. JP Morgan up $8 and they're selling everything tech they can. Why aren't the SPOOs up 20? We'll dig into that. We'll get into all the bank earnings, what's going on at Boeing. We're going to bring Tim Seymour, CIO of Seymour Asset Management, on at 8:45 to get his take on the markets. It's Friday. It's pre-market prep. Where else you want to be?
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Believe it or not, JP Morgan up $7.50. The SPOOs are down $1.75. You all know where our big level is on the upside. I don't need to tell you. Dollar flat, 100.71. Bonds down a quarter of a point, 131 and 19/32. 134 still looming large. Crude planted in the 82 handle, up a dime, or the 80 handle at 82.26. Gold giving a little bit back from yesterday. That's down 830 at 2047. Silver got a 26 handle on it, up 20 cents at 26 and 12.125. And Bitcoin, we sneaked into 31,200, up 465 at 30,995. Well, Dennis, you've been talking about the S&P going out of business for a long time, going nowhere. Rotation, rotation, rotation. How is this possible that the SPOOs are down $1?
I'll just say, not about death of the S&P, but death of movement in the S&P. I think if this rotation continues, and I don't think it will, I don't think it's going to continue like it is. But if it continues like this, you want to be writing covered calls. It ain't going to go anywhere. I mean, they are literally finding a way to make the S&P not move. I mean, this is absolutely shocking here today. The banks could not have done better. These earnings are phenomenal. And obviously, we've seen huge pops, although the pops are starting to leak, which is somewhat concerning. But, I mean, I look here and you think, okay, if you would have told me yesterday all these banks were going to come out and beat earnings, and they were all, and JP Morgan was going to be up 5%, Bank of America is going to be up 3%, Wells is going to be up 3%, and Citigroup, which just reported, was just up 4%, but it's starting to leak it back. It's only down up 1.5%. But you would have told me all these banks were going to come out and beat, and the S&P was going to be down, I'd be like, what are you talking about? That's what's been weighing on the S&P. But you know what's weighing on the S&P more than anything? Rotation. Because as soon as the banks beat, they started hitting Apple, and they started hitting Microsoft, and they started hitting all the tech stocks. The same stocks that they were buying yesterday, they start to hit. It's unbelievable, the negative correlation. The algos just have the market like this in a stranglehold, and when the value and the banks go up, they sell the tech, and the opposite is true too. Obviously, as SP had a good day yesterday where they started to finally start to buy everything, but we're right back here to rotation station here again. I don't think it continues, but wow, it's impressive, the rotation.
Yeah, all right. We got a slew of earnings to go through here as we kick off Q1 earnings season. Good morning to you, Mitch. Give those blowout JP numbers, JPM.
All right, let's get to it. JPM here. The Q1 EPS, $4.10, beat the $3.41 estimate. Sales of $39.34 billion, beat the $36.19 billion estimate. They did report 868 net investment security loss in corporate, resulting in a loss of 22 cents per share, and also gave Q1 provision for credit loss at $2.275 billion, but definitely getting the uplift here. And it's not only JPM, right? Let's keep going. Do you guys want to do one by one here?
Yeah, no, do all three. Do all three.
Do all three? Okay.
Sure.
All right, let's at least bring in Wells Fargo, of course. Q1 EPS $1.23, beat the $1.13 estimate. Sales of 20.73 billion, beat the 20.07 billion estimate. So you see here a beat and a beat by Wells Fargo, a beat and a beat by JPM. Then we get into Citigroup. Just reported, right? Q1 EPS $2.19, beat the $1.67 estimate. Sales of 21.45 billion, beat the 20.03 billion estimate. So there you see it, another beat and a beat. And then we'll get into one more after we cover these. We'll go to PNC after this.
Yeah, do the big banks because it's a different story in the regionals here. And I think, Nate Tobick you had on the closing print, Joel, and you were making a good point that perhaps this market here is rotation within the banks themselves. And perhaps what has been the regional banks' biggest problem is going to be the biggest benefit for the big banks. I think as, money has moved, and it looks like it's somewhat, this is what Nate Tobick was saying, money coming out of the regionals, probably maybe some of it went to gold, maybe some of it went to Bitcoin, but you know where the majority of it went to? The majors. Money from the regionals to the majors. And I think, and we talked about this possibility a few weeks ago too on pre-market prep. You were bringing up, could this be a real big benefit for a stock like JP Morgan, the regional banking problems, because as people are nervous about their FRC account, well, where are they likely to go? They're probably not going to another regional. They're probably going to go, I need to be with the majors. So you just wonder if, that thought process doesn't continue, and maybe this is actually really good news. What's bad for the regionals might be really good for the big banks, the majors.
Yeah, man, a couple different things here before we get to the price action. Number one, it's when I went on my bank buying spree. This is one I picked up, and kind of felt like it was late, but we'll see. I mean, it could easily erode a lot of these gains, so it's something I'm looking at a little bit longer term. Second of all, when that bank contagion hit, I mean, I got phone calls from like buddies that had money at some of these regionals, and I talked to my brother-in-law and I'm like, I'd move it. And he go, where? And I'm like, I don't know, JP Morgan, Bank of America. And plus they're getting these deposits now, and they don't have a lot of money locked up at lower rates. So they have so much more flexibility. Now, how long this will last, I don't know, but it's just, you look back in the kind of the common sense, there's the haves and the have-nots. And what Nate said was, the banks that you call and they don't pick up the phone, you want to sell. The big banks, they're going to give you that customer service. Boom, that's where you want to be. I'm just going to give you the pre-market action here, and I don't want to get too opinionated on this. 137.66. I mean, I'm not gonna say the pre-market, the high of the day is in, but holy mackerel, with the straddle being at like $4, 137.35 was a March 9th high, and if that's not good enough for you, the next high came in at 138.59. So there's the two levels for that one. Dennis, you want to make any comments on Citigroup?
I just want to clear, because people are saying, well, deposits went up. We are not saying that's what we're reading from the report. We're speculating. So
yes.
This is still speculation. We're talking about what Nate Tobick was saying. But it's interesting that these big banks, that they're buying these too. And obviously, that the earnings were pretty good. So we're not saying that we've read anywhere. This is speculation on Nate Tobick was saying. And then I was thinking about it last night after you were mentioning it and on the closing print. And you had mentioned this before. And I kind of think there's a play there. So, I mean, this could show up. We could start to see this. So I'm nervous about the regional bank earnings. But, this isn't just a bank show. I think, we got to move it into the rotation, because what has happened here is we're seeing this negative correlation between the big tech stocks and the banks. And I mean, yesterday, the banks were just sitting there doing nothing. But you know what? The S&P is ripping higher. And that's why, because Microsoft, just huge buying yesterday in Microsoft. Apple, huge buying yesterday in Apple. Meta, new highs on the move. It's been the most. Take your Jeff Mackey purple crayon, draw it from 2023, the beginning of it, and straight up 90% on Meta. Incredible moves here. this is where the money is still hiding. I still think this is where you're probably, if you get a pullback here, there's just underneath demand. That's why we've been saying, there's so many people who have missed the boat on tech, including, myself to a certain extent. I have some, but, obviously I have some cash too. I just think that, as you get these dip, in Apples and Microsoft because JP Morgan's blowing it away, not to saying, that I still don't like the valuations on those, but I think overall in some tech, if you can find, tech that isn't crazy valued, maybe tech that hasn't went yet, I still think there's an opportunity there. Money, Mitch, you're quiet in the background. I want to throw it to you. What are your thoughts, one, on the rotation? And then two, is there any, we were giving a couple the other day of tech stocks that hadn't went yet. Are you eyeing up any other ones?
Honestly, right now, I just feel like this market has shaken all the worries, right? I mean, just think about where we've gone since the financial crisis that happened, right? It just seems to me like, yes, I mean, there was some concern, but really it might have been overblown, right? And that's okay because there was risk there involved, right? A lot of traders were worried more about the risk than the opportunity, but now we need to be looking for opportunities for pullbacks because at the end of the day, at this point, I feel like we're in that wave 3 of the Golden Cross where we're going towards expansion. It looks like we're going to expansion. And I've talked about if we get above 420s, we will be out of a rectangle that was all the way back since May 5th of 2022. So it would be really shaking a lot of that bearish action and really going into what could be the new bull market.
And I think what, and I'm not saying we'll go out and buy Kathy, ARKK, but they've been sleepy.
I actually did buy ARKK.
You did? Are you long ARKK?
Yes, I am long ARKK.
I kind of like
yesterday.
I kind of like it.
I bought it yesterday I'm looking for the push to the 40.
Not long term, but I kind of like the setup for a trade. I went down and dirty and started buying some of these beat up names. We talked about Palantir yesterday on the show.
Did I actually went
yesterday? Out and did buy PLTR yesterday.
My man Dennis said, I'll take it.
Yeah, again, stopping myself out. So my stop out's going to be the low of the move there, 779. But I like the sleepiness of it. I like the setup here. I like I like that I keep seeing all these AI stocks pop. I mean, if you go to the Palantir website, the first thing they talk about is AI. I don't know what they do, but they sure promote AI to a certain extent. So I feel like it's just a matter of time before this one actually starts to, go to Palantir. The first thing, Palantir is rooted in building data-driven intelligence applications for complex, high-value government and commercial uses. I'm seeing all these AI stocks pop everywhere. And this is you go to the website, the first thing pops up AI-powered operations for every decision. That's the first thing that pops up. It's the main thing. Bring it up. Go to the Palantir website right now, palantir.com. And I'm going to hold on to this for a bit. I'm not turning around and selling it today. I had some for a trade. I've already sold the trade part, but the part that I put on for the swing trade is on right now. I just want to show it right here.
Help you
PLTR. Can you go to the website?
Yeah, I'm going to the website right now, but I also wanted to show you. Let me share my screen. I'm sorry, I didn't have it ready.
You got to get over. You got a nice setup here on the upside.
I like the chart. I like that they're promoting themselves as an AI company. And every AI company has already blasted off. It's like the sleepiest trade of all sleepiness.
I got you. So Dennis, here, look.
I'm going to hold on.
When you look up the company, I think
there's a shot to go to 10 here. I would say my target would probably be 10, stopping out. So just setting up a swing trade for you. We don't often do that on the show. 779 is the low of the move. That's where I'll stop out if I'm wrong. I think the target would be that 1020, 1023 area, Joel. That sets up about $1.70. With 70 cents downside. It's not bad. It's not quite, a little over 2 to 1, not quite 3 to 1. But what do you think of the chart? Tell me about the chart, Joel.
I'm just looking at it. It looks sleepy. We wish we would have talked about it. You had 3 lows under $8. That's your major support. And then buyers stepped up to the 830 yesterday over the last 2 sessions. Inside day yesterday. If you could clear 880 today, boom. I'm not going to pay too much attention to the stopping point over 9, and then you can see how it opens up. So you get a firm. The best thing too is if you could get, poke your head over 9 a couple days, 920, and then put a couple lows on top of these old highs. Then you set up another base. boom to blast off to the $10 area. But man, that was pretty good. We went from J.P. Morgan to Palantir.
Rotation, Joel.
Man, holy, we
That's
got
the name of the
rotation on this
game right
show.
now.
We got
So
rotation on
we're
this show.
following the script of the market. Rotation. We rotated from the banks to AI, just like
Value
that.
to growth, baby.
That's what we did. But let's stay on this theme. I mean, you were pointing out another one here, Mitch, that went yesterday. What was it? CXAI? Is that the stock?
Yes,
boy,
let's
oh
get
boy,
to
oh
the
boy.
This is
AI
up
life.
218% here this morning. Again, I don't know what the hell this is,
It
but
don't
it just
matter.
went from $2 to $22. It just went up 1,000% in 24 hours. CX has AI in the ticker symbol.
Dennis,
CXAI.
don't look at my chart. Are you looking at the chart? Don't look at the chart.
Oh my God! It went to
He's
$55 this morning.
Yes, it did.
I already was looking at your chart.
Yes, it did.
This was already $55.
No,
So we're
no, 68.62.
I have 69.90.
It went to $69 today.
I have 69, bro.
Oh my gosh. Okay, so multiple thoughts here. One, if you
Retail.
feel like we're going into a little more bull market here, we've been talking about buying dips, me and Mitch pivoting to the buy the dip camp lately. I think you've got to look to storied stocks again. We get into these story stocks, and this is, another story. AI is the story. It's why I bought Palantir, was mainly that I think it could be a hot story. I see all the AI stocks going up. The first thing on their website is AI, and it hasn't went yet. I'm like, chat, help us out here. Find more of these AI stocks. Stocks that haven't moved, that have AI all over their website. Find them right now, because I'm telling you, the ones that haven't moved, not chasing crap that's moved, talking about stuff that hasn't moved. Remember, don't jump on the train when it's rolling down the tracks. Yeah. Jump on the train. And I got a story about that one day. But jump on the train. I do, actually. Jump on the train when it's still at the station. The Palantir is still at the station. CXAI, not at the station. No, not at the station. It's blasting off into orbit, rocket ship mode, way too much, can't control the risk. I can control the risk in Palantir. I have an out, $7.79. So I have a defined risk to find out. I cannot control the risk in CXAI, so I can't touch it. Risk first, then reward.
Actually, you guys, I'm going to step away from a minute here. I'm going to go talk to my web developer, and we're going to change it from PreMarketPrep.com to PreMarketPrepAI.com.
I'm telling you, man, these things are crazy right now. What about the sleepy? Okay, there's one interesting one too. Change agent saying live person. Was that? And is that an AI player or not?
That's who we interviewed.
Yeah. Is live person an AI play? Because it's right down sleepy. It hasn't gone yet.
Yeah, that we interviewed Rob Locascio.
Again,
Dennis.
I don't think you want to marry any of these things. I don't think you want to marry any of these positions. I'm not saying all these companies you put in your long-term portfolio and 20 years from now you'd be happy. A lot of these, and I'm not talking about live person or anyone specific, but I'm saying from right now, at this moment in time, there's an AI buzz, like, back to blockchain, back to the COVID vaccines, back to, what was the one before that? It was like, there was something before that too, but
SARS?
What?
The metaverse.
There was something else too. Metaverse. Mitch is on it. The metaverse.
The metaverse.
AI is the thing right now that is hot. And go to this list. So, Chad, you are awesome. This is why we have the show. It's not for the money, I'll tell you that much. It's because we get great ideas from people. WB just gave us a whole list. Most of these have already
you see, I'm ready. I got it.
Show it. GFAI. Let's just look. So we already know that one. We've been covering that one for a bit. IDAI has just started moving. I don't know what the hell that is. T-stamp.
You don't need you don't read what it is. You just read what the ticker is.
But it's already gone too. So again, I don't want to jump on the ones that have.
That's the problem. You know what happened? I mentioned this yesterday, right? As soon as I mentioned it, guess what? All of freaking Reddit was reading that kind of stuff. Just look for names with AI. That's why I mentioned it yesterday, because I was seeing it on the street.
Are these even AI companies?
No, half of them don't even have all.
They just have AI in the ticker symbol, and they go up because they have AI in the ticker symbol.
That's it.
This market is so dumb.
What is man. What's the one with the B?
This is just the craziest market.
BG.
Are you serious? These aren't AI companies.
BFRG.
Well, POAI, Predictive Oncology. Is that an AI company? or it just has AI in the ticker symbol. It's going up just because there's AI in the ticker symbol. That's getting another level if they're doing that.
Yes.
Is that what you're doing? Is that what Reddit's doing
That's what
right
I
now?
mentioned it yesterday, Dennis.
AI in the ticker symbol and it goes.
What was that last one you
that's
mentioned?
BFRG, Bullfrog AI Holdings.
Okay. Wow.
Well, that one already went.
Bullfrog, baby.
Jeremy Newsom was tweeting
They're
about
jumping.
this one a couple days ago.
They're hopping.
You know, hey, when one frog hops the other, it just keeps going, right?
Relationships. That's what I'm about. That's my gig. I'm a relationship trader. I like trading relationships. It's what works for me. It's what's worked for me for a long time. There right now is unarguably, these AI stocks, and it's crazy if they're just moving because they have AI in the ticker symbol. But it's important, that we are aware that, Reddit is out there again. Social media is driving price here again on certain stocks. And if your stock has AI in the ticker symbol and you're short it, I'd be covering, because that's what Reddit, seems to be after you. So I don't like it when Reddit's after me. I'd rather be on the Reddit team as opposed to against them. So there's times where when this ends, we know it often ends ugly. But right now, we are definitely, bulls are in control of this market. Right now, they're definitely all over these AI stocks.
Let's go to another area that I want to be looking at. And I've been talking about this area. I've been watching to see the plays develop in here. And it's in a sector that I've really seen taken off. And that, of course, is healthcare. And when we're talking especially about health care plans, United Health reporting today Q1 adjusted EPS at $6.26, beat the $6.13 estimate. Sales of $91.93 billion, beat the $89.77 billion estimate. They increased 23 adjusted EPS guidance from $24.50 and $25 now to they rose it to $24.50 and $25 on the high end, from $24.40 and $24.90. The consensus was $24.94. Of course, these are moving with the big move in membership growth in Medicare Advantage business that is expected. I've been watching UNH, I've been watching Cigna, I've been watching ELV, Alliance Health, all these on my radar, and they're starting to get going here. And I like with UNH having good earnings here, I think they could start playing some catch up.
Yeah, wow, they've already made a huge move off the March low. I was looking at that thing down there, and it took off on news, and that was back on April 1st, the Medicare news, and just kept on going. Street leading the right way into this report, but we are $8 off that pre-market high of 537. So I'm gonna look. Oh, is there anything on the dailies here? I think you need to do a reset here, and you need to look at 2 daily highs ahead of the pre-market high. One is 530.50. That was your December 30th high, and then above that 533.68. But big run if you're buying this thing. I don't know. The top of the range wow, this is still within yesterday's range. That's pretty impressive. 530.45. Huh.
Here's the problem with UNH. It's a defensive stock.
It is.
It does actually sometimes move opposite the market. And with the wicked rotation that we're seeing, risk on day for the banks, obviously, tech coming off because it rotates against it, I'd just be cautious chasing this one, because nothing about UNH, you don't even have to look at the earnings. Rotation is driving this market. UNH is not a risk on stock. It's a risk off stock. It's defensive. It's cash flow stable. It does well even during recessions because, hey, people still need healthcare. Not the kind of stock that I want to be long in a bull market, to be honest. There's other stocks you want to be long in a bull market. And, right now the bulls are in complete control. Unless we turn around and the banks just tank, I think UNH could give these gains back, despite nothing bad with the company, just victim of rotation here. So I'm not into the UNH today.
I think you're dead right on UNH. I'd be watching the other ones that just started going. I was even watching CNC. That started getting moving yesterday. Going to keep an eye on like Cigna. That's at a nice little kind of ascending triangle. They're going to look to see if that can get through the 270 spot. And just to give one more, ELV, one of my favorite ones, just because the way it trades pattern-wise. This one's starting to get going. Going to look to see if it can get back above 500, but I don't want it right now. I'm looking for pullbacks on this one at 485 for a throwback look. But that's just the healthcare names. But overall, have you guys seen the move that has happened in healthcare? I talked about IBB early on in the week, and that's really started to get going.
Yeah.
So I was already too late to the spider, right? So I looked at IBB to see if the biotechs would play catch up, and that's really starting to get moving here. So I'm keeping an eye on the healthcare sector overall.
Huge move in XBI. Nice move up. Has major resistance up there at 80. XBI moves with the banks to a certain extent, and I'll tell you why. And you can see why XBI. You can actually see the correlation here with the KRE and the XBI. The reason XBI moves with the banks is that most of the smaller companies here are very dependent on credit. They're very dependent on to continue to finance their R&D. So if credit gets tighter, if the banks have trouble and credit starts to get tighter, those small little biotech companies might have trouble getting loans. So that's why XBI is moving very much with the banks. So I think if the banks are having an okay day, it's actually good for XBI as well. Again, at the regionals, and keep your eye on the regionals. So it's going to move more with the regionals because I think you got a lot of regionals in any of the majors too. But basically, the XBI, all those smaller biotech companies are very reliant on lending.
And nice technical setup here too. The big boys were stepping up at 76, right? 4 lows in that area. So if you don't mind, risking $4, but more interesting on the upside here is this $80 level. You get above 80 here, you had a high at 79.93, and then in yesterday's session, after having a big move, it was 80 right on the kisser. So keep an eye on that if you want to buy it into strength. And also, if you look at the bottom right chart here on the monthly, I mean, this thing is nowhere even near any kind of retracement, let alone 50%, but 0.382, it's probably not even near there. So keep an eye on 80. Let's look at the IBB. That had a nice move yesterday. I see some congestion here a little bit at 134. We haven't looked at Biogen in a while, huh? How's that doing? That's just kind of been creep. Ooh, look at that little
Setting
bottom.
up.
Yeah.
It's come back a long ways, though.
I like it.
The one thing, and again, but you're coming into resistance here now. You actually, one cautious thing is these are defensive too. So, I mean, it depends. Like if you're thinking that biotech's going to be the leader in the next big bull market here, maybe XBI if you're really thinking, risk on, but Biogen's actually a defensive stock. It actually moves opposite to the market sometimes. So you just got to be careful. And you're coming up to this 300. That's just
man,
resistance.
look at that.
So I just feel like there's some meat on the bone. I'm long Biogen. I've been long Biogen in my long-term portfolio for 20 years. I still own Biogen. So kind of talking against my book here. But if you had it on for a trade, it's had a pretty good move already. I mean, it'd been nice to buy it 3 weeks ago at 260. Now it's 290. And you're going into this all-on risk on market. Biogen is kind of defensive. Yeah, more like the UNH trade. A little bit too defensive for me if I'm going full rah-rah bull.
Full rah-rah bull.
And I'm not full rah-rah bull here yet, but I'm buying pullbacks because that's
292, 293. I mean, I'm looking at this area, and you had it like not one. Let's just call it 292 because that encompasses most of the highs. 1, 2, 3, 4, 5, 6, 7, 8 highs in a row. Let's just call it the 292 area. So I'm not worried about that other high, but 8 highs in a row in the same area for a big stock like that, that means someone is selling and they're not letting up. But S&Ps are flirting. We got a good level on the upside. I just want to alert our traders and investors that the CPI high on Wednesday, 77.75. You know what happened after that? And then, boom, we came all the way back yesterday and we got to 77. And now the pre-market high stands at 4176.75. So we'll keep an eye on that. Clear the path at least to 4,200. So we're staying pretty big here going into and 8:30. Mitch, do we have any numbers at 8:30
Yeah, we do.
today?
Yes, we do. I'm ready to go, baby. We got retail sales coming in here month over month. Consensus is negative 0.4, prior negative 0.4. When you look at the core retail sales, that's at negative 0.1. Consensus is negative 0.3. Let's see what happens here. Let's see if the market reacts to these numbers. Of course, we'll find out as it hits the tape. 8:30, baby. What's going on in the action, Joe?
Oh, there might be a little weak. I think the retail sales are coming in a little weak here. I went to the XRT. I'm sorry. I didn't think we would move off this.
I got them here. U.S. retail sales month over month for March, negative 1% versus a negative 0.4 estimate. Was negative 0.2 was the prior reading. So definitely coming in light there. That shows that retail sales a little bit weaker. Core retail sales at negative 0.8% versus a negative 0.3% estimate here. Also coming in a little bit light.
Little dip under 41.70. There's some firm sellers out there here. Now we're pulling back. I don't see the banks are still maintaining their bids. We're just flirting with unchanged. Nothing really to get excited about here. Still got the resistance up there. So is it good that the retail sales weren't good? Because
that's the hard part. That's the hard part. At this point, do you want a recession or do you not? Right? I mean.
Trying to figure out what it wants. It wants because the Fed will stop raising rates.
Yeah, it's kind of hard here, but I think the Fed is already past that too, and I think that's why the market is where it's at. Because at the end of the day, the Fed has turned on their policy, and I think that's why we're at these levels.
Turned is what? Like they're not raising anymore?
Yeah, just that alone gave the market this bullish feeling. I mean, look at how we've reacted since that day, right? Since that time, we've reacted up and shaken all the bank concerns. So to me, I mean, it just seems to me like we're definitely shaking, and money managers put in their money on technology names, and they're going to ride this market higher.
Well, let's hope so. Today on the closing print, I'm going to have Blue Putnam on, my boy Blue from the CME, and I'm going to get his take on the inflation data, because he told us, was it a year ago, Dennis? That, man, it takes a while to fight inflation, and I'll see what he thinks about these March numbers. But that dip was bought at. It was dip. Buy the dippers are out
over
there.
The dips right now here. The bulls are in complete control. And again, like I said 2 days ago, it's okay to be wrong. It's not okay to stay wrong. And we got the opportunity to buy the dip a little bit yesterday, a little bit the day before. But I mean, we're at this spot right now. The banks are going to report earnings like this. I just think like that was the main worry holding us down here. So until
inflation wasn't that bad.
So
either,
what
right?
could change the narrative is like a warning from the Apple or a warning from Microsoft. Something like that could change the narrative quickly. But right now we have to take all the information that we currently have. And that information we currently have is there's a possibility of a bloody soft landing here. Yeah. And if that happens, stocks could move higher. So right now, at this moment in time, I'm buying dips. I get a tape warning and Apple warns and everything, gets ugly. I'll switch in a hurry. It's my job as a trader. As an investor, it's your job to buy dips and invest. So two hats right now. As an investor, it's your job to buy dips and hold. As a trader, it's your job to flip back and forth all the time. You have to flip back and forth all the time because you're a trader. You're trying to, production, you're trying to bring in earnings. You've got to time the market to a certain extent as a trader. It's your job to flip back and forth and back and forth and back and forth. Right now, we're in a buy the dip market, not a buy the rip market. We just ripped yesterday. Remember, we did.
Again. We're getting some weakness. Watch the bids, Dennis. Watch the bids on the downside here.
But remember, we were not buying rips. We ripped yesterday, so now you need another dip to buy. But if you get a dip in tech here today, probably another buying opportunity.
They're dipping. These big components are just they're weighing on the market. We have Apple down $1.11, Microsoft down $2.52, Google in the red by almost $1, Amazon fractionally, Nvidia down, Tesla down. It's so funny. I look at the top 6 components here; they're all in the red, and then you got Berkshire up, ExxonMobil,
Thanks, baby.
Yeah. Wow, I don't know. I tell you, this JP Morgan is holding up here. We are coming up on. All right, now we're down 5.5. So, Dennis, I'm full within your camp here on buy.
Dip buying,
dip
not
time.
rip buying. And again,
because then we got a
ripped,
triple
so
top in
yesterday
there.
was the
We got
opportunity.
triple top. We got triple top in right now. We got a triple top in the market. When does Apple report, by the way?
Next, I believe the big boys start coming in next week. So
You know
I
what?
know
We did
Tesla's
do
next week.
Lucid and we did do Boeing, but you know what? They should be part of our TradeZero segment. So let's do that because we got our guest at 8:45. Boy,
You know it.
Tangent Friday.
Let's do it. This is a good show today. Let's go. All right, get into our stocks to watch. One of the stocks definitely on the downside today, getting hit, is, of course, Boeing. I know the chat was asking what happened there. So it looks like on Thursday, they warned Boeing on Thursday warned that it would likely reduce deliveries of its 737 MAX airplane in the near term because of a problem with a part made supplier by Spirit Aerosystems. That's ticker SPR. And this was reported by CNBC. So Boeing definitely taking a hit on this. And then also you guys can look at the supplier. That's also taking a hit on this. That's SPR. And you guys can see both of these down big here. And is this big problems for Boeing ahead?
I tried to short this SPR on this news. Like it broke, and I'm like, I was trying.
Evil.
There was no bids on this thing, and I'm like, do I want to hit 33? I'm like, do I want to hit 33?
Yeah, you had
like
to case
34.
It.
I'm like, do I want to hit it $2 down? Not really. But anyways, now it's $5 down. I'm thinking, why did I not hit it $2 down?
Yeah, so, that's how it goes a lot of the times, right?
Yeah, I should have chased on that one. I don't like chasing, and I want to hit something down $2. And you know how big of a deal it is. But as Boeing has lost this much, there's no doubt that the company that makes the part that's causing the problem is going to be down more. So SPR is down 14% on this. I think it's a short-term fix. I think they will get the issue fixed. I think there will be a buying opportunity. SPR is actually interesting down at 29 to 30, but maybe let the dust settle on it.
Yep, you got a gap fill if you come down to 29.62, and you know how I love multiple lows in the same area. Well, just above that, oh man, that's a gap area. If you're looking for more downside here today, I'd be looking these lower 29s if they continue. I don't know. They kind of already whooped on it pretty good. I don't know if you're going to see that today, but that's a great level. Boeing, I don't know. Boeing always is tricky with, when it gets this kind of news. There's a firm seller at 202 right now. So if you're looking for some upside, they're going to just blow this off. You get through 202. What do you got to do to get into yesterday's range? Oh, you got a ways to go. So I don't know. Wouldn't want to be short this thing if it gets above 202. And then on the downside here, next daily low comes in at 20049 and then 198.63 in Boeing BA.
All right, let's keep going. Let's go to the next stock that had a little bit of some disaster news. Let's go to Lucid Group here. You guys know how I feel about Lucid. I don't even got to bring it up. I think there's two bears here that don't feel the best about Lucid for sure.
I had the $5 price target on this thing when it was like 30.
Dennis, this is the one that you and I should have put out the short report. That's what happened. Lucid reports 2,314 vehicles produced in Q1.
How many?
2,314 vehicles produced in Q1. Here's the better one. Only 1,406 vehicles delivered. So less vehicles delivered than produced. That is not good news here. Estimates by Wall Street had expected Lucid to deliver about 2,000 Airs in Q1. Lucid, of course, said it delivered fewer Air sedans to its customers in the first quarter than it produced. Also, if you guys remember, in March, Lucid cut 1,300 workers, about 18% of its workforce.
Wow.
The company also stated here that they're going to have a one-time charge between $24 million and $30 million for those layoffs, and that's most of it would show up in the first quarter.
It's a $13 billion market cap, Joel.
For 2,000.
But it's the new Tesla.
$1 billion to make 1,000 cars. I mean, people can say, "Oh, it's
but
$8."
It's the new Tesla,
50.
Man.
There's a million new Teslas is the problem, but you know what? The best one is just Tesla.
Yeah, that's
so. I mean, I'd rather own Tesla at a nosebleed valuation than own this zombie. This is a zombie company. This isn't going to make money anytime soon. I know it's owned a lot by the Saudis. Maybe they eventually just buy it all. I don't know. But at a certain point in time, they might do that. But this has just been a mess. And you got this stocks that are going up, 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 up. Obviously we've had a lot of stocks come off the lows from, tech companies. And this is a tech company from the January lows. And then you got one sitting on the lows. I mean, yeah, there's support at 6, but this is the definition of, of
underperformer.
weakness.
Yeah.
Underperformance. Holy.
There's a bunch of lows at 750, not for my cup of tea, and then the next daily low is 717. So a bunch of daily lows in the same area. If this was your target, I don't know. This is a pretty thick stock. You were over close to $9 on Wednesday, but multiple lows. Nothing great looking on this chart. All-time high in Lucid was 64.86, and that just happened to be in January of 21. Was it January? No, February of 21. Oh boy, not a good looking chart. That's like a couple thousand cars. I mean, let me take my car out of the garage. I mean, I could make a couple thousand cars in there. I mean, that's ridiculous. But
I'd like to see that. A little bit of an exaggeration on your part, but again, it just shows like the valuations these things were trading at one time. It's still ridiculously overvalued, and the stock's down like 80% from the highs.
Yeah.
I mean, there's so many better places to be for your money. And maybe you get a turnaround and maybe you get a bounce in this thing. But you know what? There's been a lot of people who have come into Lucid and been looking for a turnaround and a bounce over the last year and a half. And you know what they all have in common? They've all been wrong.
Yeah. That's for sure. All right, let's get to, of course, some of the bank outlook and what's on the upside. You can see a lot of banks, of course, showing up on this. One that kind of gave me a little bit of a heads up. I was looking at Goldman Sachs to see how it would trade yesterday. It did pretty well. I actually traded it yesterday. They traded it, got in and out of it, but started showing that upside move, and it was a first downside move. I was looking to see if they were going to red to green it, and you can see how it was coming towards the end of the day. That was giving me a little bit more of a sign, and this stock loves to run into earnings. So now that the JPM has had good earnings, Citi has had good earnings, Wells Fargo has had good earnings, I'm definitely looking at Goldman Sachs today. That could continue riding higher. At least I feel so. So I'm going to keep
a little bit
on this
different though than Bank of America and JP Morgan. I worry about the investment banking here because it hasn't been a great quarter and they're so big into investment banking.
Yeah, my idea would be run into the earnings, not to the actual earnings. Right?
Yeah, but again, it has run, and 340 is a huge number for GS too. I'd actually be taking the profits in GS. It's just been a big run.
It's up $5.50, and you got a sneaky seller here at 538. 340
is big.
Yeah,
it's just a nice level.
Doesn't feel like it's going to get there, but if you could clear pre-market high 538.36, or if you're looking to short it, above 340, that was a big red candle. Some people are like, "Oh my God, this is back at 340." So that's what I'm looking at for Goldman Sachs GS. Too bad they don't split that stock. That used to be such a fun one to trade when it was like $90, $100, $120. I used to move with the S&P really well.
It's still fun to trade. I do Goldman versus Morgan. So again, my relationships, GS, MS, I've pair traded that for years. Obviously strong relationships there. There's opportunity to extract alpha from that relationship for sure.
I wonder. I shorted Morgan Stanley from up there into the gap down. Should I go back after it? He'll be on my radar today.
Morgan hasn't run up as much. So there's separation happening here.
Yeah.
Goldman's come back a lot faster than Morgan. So again, Morgan's got room to 90. Goldman Sachs has room to 340. It's 337. There's not much meat on that bone, in my opinion. I think Goldman's come back up too much too fast. And I don't like the investment banking.
All right, let's go ahead. Let's do one last one here. Let's see what I see on the Schwab actually getting up a little bit here. What about Schwab? Will this get out? Will this shake the downside outlook?
Keep an eye on PNC. PNC will be your indicator for Schwab. PNC is trying to hold its gains. PNC's quarter was fine, but PNC was way up and it's leaked it back, which is concerning as well. So I'd just be cautious. Keep an eye on PNC. So PNC starts to break out, Schwab will do well too today. It's going to be your leader today. That's not for every day. That's just for today. PNC reported it's regional. Schwab's moving more with the regionals and the majors right now.
Another little leg down here, Dennis. Watch out on the downside here.
Watch out on those bids.
Yeah,
Ba, ba,
yeah.
ba, ba, ba.
Ooh, the
Yeah.
high's in. Man, I was hoping to get another shot at that 77
Yeah.
area, but right now, that's fading. But 8:45 now. We got a special guest coming on. We got Tim Seymour coming on, the CIO of Seymour Asset Management. Roll the intro, Mitch.
He's not here yet, Joel. He'll be here in a second, I'm sure. He's not in the back yet.
Oh, okay. Tim's is a couple minutes behind.
Yeah,
We're waiting
a
on
couple
Tim
minutes
Seymour.
behind. He'll be here in just a second.
Yeah, Tim's still struggling with the Ranger loss there last night, so he'll.
All
Yeah,
right,
Dan.
well, I'll put one on the radar that I took a shot in, team. I'll let you guys know on one that I took a shot on. I took a shot on DHR, Danaher Corporation.
Long or short?
Long.
You're long it right now?
Yeah. I got this yesterday. So I'm looking for this one
Breaking
to start
out.
making a move.
Holy
Start
What is
making a
going
move. It's
on?
off the
Is there
bottom.
news? Do we have news?
No, it's
What is
just the
going
leak.
on?
It's tech, Joel. I mean, it's the rotation. Tesla's down 1.3%. Apple's down 1%.
tech is
Microsoft's
getting
down
hit.
1%. Google's down 1.2. Netflix, which had an awesome day yesterday, down 1.2. It's wicked rotation. The problem
Look at this. You'll see the big boys right here.
is the weighting of those big mega tech stocks is going to overpower 5% moves in the banks. The banks go up 5%. Tech goes down 1%. S&P's flat because that's how much they're weighted. So it's tough on the market to, it's tough on the S&P. And I mean, we can keep arguing that we're in a bull market or bear market. In the last 12 months in the S&P, we are in a sideways market. That is what we are in the S&P. JC even said that on the show. In the S&P, he said, yeah, it's been sideways. And why? Because the wicked rotation, the way the index is constructed, it's heavily weighted to those market cap names, which is obviously Apple's and Microsoft's. Those have held up where other stocks have been killed, and it's kept the market really going nowhere. In the last couple of weeks, we've been ripping higher. But overall, when you look and you scroll out on the S&P to the last year, we've basically gone nowhere. Covered call writer's dream market right now.
All right, we are coming up on the pre-market low. The pre-market low stands at 61.75, so that's where it stands. That would be a short-term target here if you're looking at the downside. If in fact we take that out, man, oh man, not much in there. Daily swing number and the former closing high of the move that came in at 4153.75. So we're getting a slow leak here in the S&Ps heading into the opening bell. Okay, now let's roll the intro for Tim Seymour, CIO at Seymour Asset Management.
All right, let's go ahead. Let's get to our guest today.
Good morning, Tim. How you doing?
I'm doing great, guys. How are you? It's a pleasure to be here, and it is an exciting time of year. It's earnings season, it's hockey season, it's playoffs are coming. Where do we begin? By the way,
are you in the metaverse?
Yeah, where are you?
It looks like you're in the metaverse.
Yeah,
this is AI Tim.
I am in a conference room in my office where I just assumed a blurred background was more palatable. What I was trying to do, actually, the reason I'm in blur mode is because, and the reason I'm a couple minutes late is I was trying to upload a New York Rangers logo as my background, and clearly either there are New Jersey Devils fans in the metaverse that are stopping me from doing this, or I don't know. But anyway, that explains the funky and weird background. No, I'm not still at the Benzinga Psychedelics Conference.
Yeah, you took my line from me. Oh, man. You took it right out of my mouth. I was going to say, wait, Tim, is this a little bit... Well, can we talk about the conference before we get to the markets? And with Benzinga, got a big conference down there. I know you were one of the speakers down there. Could you just give us a quick recap of that?
It was awesome. So it was the Benzinga Cannabis and Psychedelics Conference. I didn't stick around for those crazy kids and tie-dyes, listening to their dead bootlegs for the psychedelics. But the cannabis event was all business, and honestly, I've never seen a bigger turnout. So heads cap tip to Benzinga, because clearly everybody knows the cannabis space has been under a lot of pressure. But I think what was really fascinating, and a couple important themes that we're running through this is, the story of cannabis is not a demand question. And the addressable top line in the industry, depending on whose numbers you're using, and my numbers would probably have it be north of 100 billion if you consider adult medical and the important and unfortunately a major headwind from the illicit market. But anyway, great demand, industry rationalization, no question, out of necessity for sure. I think pie in the sky expectation on federal legislation anytime soon, but companies that have probably never been run better. So the institutional and the retail investor world is complicated by the fact that it's very difficult for institutions to buy and hold these stocks because the custodial universe, the pipes, the infrastructure of the industry, if anything, has taken a couple steps backwards in the last year or two, while the rest of the industry has moved forward. But it was a really exciting couple of days, and I love being there because I truly, this is just not a Benzinga advertisement. It's the kind of a conference where everybody's down there to get something done. It's through the use of technology, the platform that Benzinga has, but also just I think the vibe that's there. People really find it useful, and I think there's again that full mix of investors, companies, strategics. And anyway, the weather in Miami was awful. It tells you just how good the event was because it was. I'll save the term.
Big rain down. Was there big rain down there?
It was raining. It was it was windy. It was awful. But again, it's actually better. I kept sending my wife pictures of the rain outside just so I wasn't going to get in trouble when I got home.
All right, let's get to the markets. Let's get to the big macro picture here. We've had a nice run up, right? The banks did okay today. We're heading into Q1 earnings season. Banks, off to a good start so far. Give us your big top-down view, and then we'll go into some sectors and individual issues, perhaps.
Well, look, I mean, JP Morgan's numbers were extraordinary, right? And they were extraordinary not only because they showed record revenue growth and profitability, and we can start to dig into the net interest income, which will be easily attacked, but the quality of the numbers overall were I think, also what should catch your eye. And the fact that deposits grew, we kind of knew that was going to be the story. And I just think that banks are guilty until proven innocent. And so the interesting thing about the banks is, they've had a couple quarters where they've actually rallied into earnings season, and that's been the kiss of death. Clearly you've got a little bit of a relief here. Look, the rest of the market over the last week has sent a message to the banks that you should be also rallying too. The rest of the market has sent a message that actually the worst of even just a deposit run is over. So I'm not going to go pie in the sky on the outlook for banks. There are 4 or 5 major headwinds here. The question you really get to is when you're talking about the top of the food chain in the money center banks. And I'm long JP Morgan, I'm long Citibank, I'm long Bank of America. And it's not a question of deposit. It's not a question to me. I just don't think JP Morgan and Bank of America got credit on the way up for the net interest income. In other words, were we really pricing in 49%? NIM growth and or net interest income growth or NIM margin growth? We weren't giving them the credit on the way up. So let's, I think if you're investing in banks, your biggest concern are credit issues you just can't see right now. Earnings power of JP Morgan, but the cyclicality of the global economy that we're in right now, I think we all get it. We all know that loan growth is tightening. We all know that commercial. I mean, C&I loan growth was one of the great stories for banks over the last 3 years that nobody paid attention to, which was that they really were lending again. So let's watch this. We know banks are going to be more regulated. We know that they should trade at a bigger discount to where they should have yesterday. But that's the interesting part of it. And again, the dichotomy between banks and the market, you've seen this so many times. It just so happens that this is the front stage event for markets right now.
What about this rotation here, Tim? And this is nothing short of incredible. I mean, you get the banks, which has been the big worry in this market, and they report some pretty good earnings. JP Morgan up 6%, Bank of America up 3.6%, Wells up 3.1%, all the banks trading higher. And here's the S&P trading down 8 points because they automatically sell Apple and Microsoft and Google and Amazon and Netflix when the banks beat. I mean, it's such a wacky market here right now, but that's what we are. It's rotation station. When does this rotation break? Like, when do they stop selling Microsoft because JP Morgan reported good earnings.
Honestly, Dennis, I feel like they should have done that yesterday before JP Morgan's earnings. So, I am a little, I just say less than bullish on where I think mega cap tech should be going, both, because of the multiples that they're trading at, because of the move they've had. Everybody knows what's going on. I mean, the NASDAQ, the triple Qs have had a bull market in the middle of a bear market. They're up 23% in I don't know, with the last 112 trading days. So there's no question there's been outperformance here. They've been a safe haven. They've been treasury stocks in the middle of a concern about the banking system. It doesn't surprise me. I'll just say this for the market and the breadth that I think you're kind of getting at, which is that I think that the breadth of the market was actually pretty impressive before we hit SVB. Industrials were kind of starting to outperform. Transports were coming back. With FedEx had given us some great numbers, and some of the transports were trading better. Even the airlines, if you listen to the second quarter outlook and the guide that Delta gave a couple of days ago, it was fantastic. I mean, their outlook for second Q revenue, RASM, revenue for available seat miles. The airline industry has these crazy acronyms that no one understands what they are. But I just, I actually think that breadth may sneak back in here for a little bit. And I think we have a window. And I think that's part of what's going on here. Let's not forget, back to the S&P, Dennis, that, you've traded back up to near the top of this range, which has been largely 3,800 to 4,150. But you could make an argument it's to 4,300. Either way, S&P was kind of up there and had been kind of consolidating up near the top of the range even before the good news over the last couple of days. So rotation, it kind of makes sense to me. I'm not too bummed out that the headline indices are lower. And I think the overall trend is that I think, the broader economy stocks are going to outperform the mega cap tech stocks, especially now after the outperformance that tech has had.
And what about the whole, elephant in the room, the Fed, Jerome Powell, recession, soft landing, the Fed pivot? We're really torn on that. Where were you on the old interest rate, Fed pivot, recession, soft landing? We seem to get a different picture every day.
Well, I think Fed fund futures, which have about 60 bips of cuts this year from a peak terminal, I don't know where it's this morning, 503, 504. I don't think the Fed's going to be cutting 60 bips in 23. I know there are plenty of people that can point to the world and say it makes some sense. I just don't think that that's where we're at. Therefore, I think the markets need to, I'm just looking at my screen, 506 is where we are at to July. It's interesting that at least in the last couple of weeks, we've been slowly easing out the terminal rate again. We moved all the way into really like March, where off of SVB. But I think the Fed is going to overstay the party like they always do. So I'm not complimenting the Fed on staying the course. I'm just saying that this is what they're going to do. So I think a couple places where I think investors should focus. One is that the dollar is best days are behind it. And that shouldn't, that's not a big surprise to everybody after a 5% pullback on the dollar from kind of early March. But, the 5% rally we had in the dollar from January through early March was something that caught people off guard because everybody thought the dollar was suddenly going significantly lower. It is going to go lower, but the most important thing for asset classes that are at least benefit from a weaker dollar is that, I think a strong dollar dynamic, the wrecking ball that is a strong dollar, it really is for international, for emerging markets, even for a lot of commodities and resource asset classes. Just the lack of a strong dollar is an environment that's great for a lot of equities. And I think the dollar is going lower, but again, it wasn't an 18-month dollar rally from May of 21 to October of 22. It was an 11-year dollar run. A very quick and hopefully non overly promotional. I'm working on a new international ETF strategy, and the ticker is IDVO, and it's the sister ETF of the Devo ETF, which is a pretty well known dividend appreciation US based. IDVO is international. So what I love about working on this strategy for these guys, and I'm working with CWP, who's the sub-advisor, multinationals around the world who are some of the biggest companies either a lot of people have never heard of, like Tenaris, which is a pipeline manufacturer in Argentina, which has got a pristine balance sheet and makes all of the tubes for some of the biggest oil service and integrateds. Diageo people know, Novartis people know. Some of these companies that are international players, first of all, they benefit from the weaker dollar, obviously. And if you look at the outperformance of international since the dollar peaked, that's where I think you have a real great backdrop. I even think EM will outperform here in the absence of real credit dislocation. So, back to the Fed, what the dollar is a function of is our central bank differentials, right? And I think the sense is that the Fed is not the most aggressive central bank in the world right now. They obviously were the most aggressive central bank back in early 21, or I should say mid 21, when the dollar was sniffing out that the Fed had to move and had to move aggressively, which of course suddenly they did in the fall of 21.
Tim, 2 minutes left here. We got to finish with hockey talk here. What are
there
your
it is.
There it is. He's already picking his Stanley Cup champions.
I got you.
Who's going to play them in the finals? If the Rangers are getting by Boston and Toronto, and they started with Toronto last night, but that obviously, it didn't really mean anything that game. Who are they going to play in the finals? Who's going to meet up with them?
Yeah,
go to the West. Who do you think comes out of the West?
Look, it's hard not to assume it's going to be the Avalanche again. They're so good. McKinnon does what he wants to, it's fascinating. Whoever comes out of the East is going to have earned it. That's for sure. I was actually at the world's most famous arena last night, the self-proclaimed world's most famous arena. Does that piss you guys off, by the way, that the Garden calls itself the world's most famous arena? Because it is kind of absurd. It's like if I gave myself the nickname, I'm the smartest guest that comes on the morning show.
You didn't know, Tim? This is the #1 morning show to watch.
Exactly. I know that. Why do you think I'm here?
Hey, you don't see we got bells and whistles? I got you your Rangers right next to you. You didn't even have to set it up.
That is so good. So
you put that up, Mitch.
I put that. Come on.
Oh, yeah.
Come on, baby.
Smooth.
Let's go.
Mitch did me a solid. I think what's fascinating to me is that the 5 best teams in hockey, 4 of them are going to play each other in the first round. I mean, Toronto and Tampa, and the Rangers and the Devils are 4 of the 5 best teams. Carolina's going to I think dispute that, but obviously the Bruins have had a season that is almost surreal. I mean, they've been so good.
Yeah.
And I'm talking about professionals, teams, sports, all the major categories. The Bruins season has been something like we've never seen. So I fear the Bruins. You have to, but I think the Rangers have as much talent on paper as any team, and that doesn't necessarily win anything, but it's going to be great, folks. Just watching the hockey playoffs. It doesn't matter what games you're watching.
They're fun.
So good.
Yeah, I have to give you guys both a little bit of credit here because a while ago I was talking up my Red Wings, and Dennis did his deep down analysis, and man, oh man, did they completely fall apart. But Tim Seymour, he's the CIO of Seymour Asset Management, joining us here on Pre-Market Prep. Big Benzinga week for you, Tim. Thanks again, and we'll get you on again soon.
PMP, guys, I love it. Thank you, Mitch. Thanks for the logo. Go Rangers. Go Benzinga. See you soon.
Thanks, Tim.
Okay, Tim. All right, guys, I'm gonna hop. Just keeping an eye on the pre-market low, and now that we pulled back $10, you gotta look at that close. That closing price is gonna be pretty important. The bulls need to get this market into green over 72.75, or we might have a little fade. I'm a little late here. I'm gonna take off. You guys finish things up, but great show, great content.
It's a very interesting market here. I'll just finish up. The rotation is nothing short of incredible here once again today. The banks are holding up fairly well. If you're trading the regionals, keep an eye on PNC. It will be your leader in the regional banks. We are seeing some profit taking in some of the consumer staples here. They have been playing defense. The market is going risk on. Those stocks typically move opposite. Procter & Gamble showing a little bit of weakness. I do have a position. No, I don't have a position. I didn't know if I did or not, so I just went through it. I don't have a position in Procter & Gamble. I usually trade it every day.
I'll probably be selling out of it today.
Yeah, the consumer staples have had a pretty good run.
Yeah, they did.
I think it's profit taking for the consumer staples. At least that's what we're seeing here this morning.
What about the city move, man? That was a nice little pop pullback, about
Pop and the
50%
drop.
of the move.
Yeah.
It's
One
about
thing you got to
50%.
consider
We'll
in the
see.
banks is they are notoriously, is that even a word? I just made up a
Notorious,
word.
maybe?
Notoriously, but I say notorious. I put two words together, and I came
Don't
up
worry, it happens to me
notoriously.
all the time, man. It happens to me
Two
all the
words
time.
together. So I just created a word here on pre-market prep. But bringing it back to the banks, they are notoriously known for popping and dropping. We've got the pops. We've kind of started to drop on a few of them too. So just be careful chasing them here. They have had pretty, this is a big move, like I said, with the Goldman Sachs. You're talking about a move off the lows from 301 to 340. Talking about 15% move in 3 weeks. It's a pretty good move up here. Some of the other ones haven't went up that much. Bank of America's big resistance, which just give you some numbers, is $30. JP Morgan, big resistance is 135. It's where it is right now. Wells Fargo, big resistance up here at 42. It's off those highs a little bit here too. So keep an eye. They are opening into resistance. They do set up for the potential pop and drop. They're really good earnings though. So it's very important for the banks to hold on for the overall market here today. Or maybe it's not. Maybe if the banks sell off, they just buy tech anyways, Mitch.
Yeah, I mean, yesterday that was one thing that I did see, Dennis, was the big boys is what was leading yesterday. NVIDIA and AMD weren't even as strong as Google, Microsoft, Tesla, Apple was all like kind of pushing higher. And then all of a sudden you saw a quick little sweep. Then NVIDIA and AMD joined the party, and then they started going higher. So we'll keep a watch to see what happens to tech today. Can Apple, can Microsoft, can Google, the big boys, catch a little bit of a bounce? We'll keep an eye out for that. Of course, you guys can keep up with everything Dennis does. Triple D Trader. You have a great weekend, my friend, and enjoy.
See you guys.
Friday.
Enjoy.
Take care. Dennis is getting out of here like always. You guys can keep up with all the action Benzinga does. And today I will let you guys know, of course, we're back at it this Sunday, Japanese candlestick charting techniques. If you guys want to learn some of the techniques that I use to find trades or others, like always, candlesticks, right? That's probably what you're using right now on your platform. Do you know how to use them? Well, one thing that this book can definitely do is get you a head start and get you started on an understanding of technical analysis. I know this was the first book that I read on technical analysis, and of course have read plenty of others now, but this one definitely helps out with patterns. We're going to be going through continuation patterns this weekend. So if you guys want to check that out, definitely join us this Sunday on the book club. We get more members every single day. Going to go ahead and throw up the link in the chat. I'll see you guys over on Sunday on the book club. But now to bring you guys over to some live trading action, of course, live trading coming up next, where we give you guys the process approach and how we get after the market. Let's see what I can get into today. I got to go ahead and control some positions out the gates. And let's see if we can get some money on the upside. Smash that like TJ Agent says. And we'll see you guys a little bit later. Right now, starting up live trading. Let's get into the action.